Hello everyone, welcome to another episode of Financial Tidbits with me, Royston at NOF. The market and of course the Fed seems to have brushed off the latest inflation figure where the CPI rose by 5% in May. The narrative of transitory seems to be well accepted by the market as stock prices continue their upward trajectory. In today's video, I would like to bring to your attention a major event that is happening in China that could turn this transitory event into a structural one. But before that, let's see what happened yesterday at CNBC.
Well, I'm going to watch the Fed on Wednesday. If they treat these numbers, which were material events, they're very material. If they treat them with nonchalance, then I think it's just a green light to bet heavily on every inflation trade.
Well, yesterday we have got Paul Tudor Jones, a billionaire hedge fund manager who said that in tomorrow's Fed meeting, if they remain nonchalant to the fact that inflation is a material concern, then one should show his hands. I mean, show hand and go all in. In his interview with CNBC, let's call him PTJ for short, hinted that hedge funds seems to be short the commodity trades because they have got reassurance from the Fed that inflation is only a transitory event. So makes absolutely no sense that commodity prices should be any higher than now. Am I right?
If I just look at where asset managers are, 60-40 types, the one thing that they should be invested in, they're not invested in, probably because they're hearing these assurances that inflation's transitory. So you've got this massive short, really, in the commodity complex. A massive short there. So
then he again hinted that if the retail investors, aka Reddit crowd, is to get really nervous about inflation, then they could easily drive the prices up for these commodity assets 2 to 3 times higher.
what happens if the Reddit crowd ever gets into commodities? God forbid if the bullies, the financial markets, ever were to take it on, for instance, like retail did back in the 70s.
Explain what you mean by that.
What I mean is that commodities are finite supply, small markets, generally speaking. And if we ever get an inflationary psychology, like, for instance, we did when I was in my 20s, back in the 70s, if we ever get that again, and if you ever got retail actually nervous about inflation, then the one thing that leads inflation, which is commodity prices, it's the easiest tautology there is, those things can literally scream, double or triple with no problem whatsoever.
So this Wednesday Fed meeting will again be super interesting. If the Fed is not going to taper, the market will likely rejoice but risk a worse inflation-driven sell-off in the future. If the Fed starts to taper, that could be a sign that inflation really is a problem and the market could puke on that news. Either way, Yellen has already said her piece. Higher interest rate is a plus. At the same time, when PTJ made a comment on inflation, another well-known banker, Jamie Dimon, CEO of JP Morgan, said that the company is looking to hoard cash because, in his words, very good chance inflation is here to stay. Now, some will be scratching their head and wondering, ain't having cash a bad thing when inflation is high because your dollar today is going to be worth less tomorrow? But from the perspective of a bank like JP, they now have ammunition to buy higher yielding assets and make more money for their rich clients. So now, we have these big boys warning about higher inflation. In the last video, which I did with my buddy, Nicholas, we highlighted food, which is one of the top 3 components that make up the CPI, has actually fallen on a month-on-month basis, which seems pretty perplexing when we hear about rising food costs at our friendly neighborhood restaurants. Then we have got shelter or rent, increasing marginally from April to May. This is the biggest component of the CPI index, and the thing with shelter data, which a lot of you might not know, is that the data is collected every 6 months, while most other components are sampled on a monthly basis. This is because rent prices tend to be more stable, hence lower requirement to sample the data every month. But is that now true in a super hot housing market? What this means is that the potential rise in home values and rents is not yet reflected in the CPI figures. The actual CPI could be running at a mind-blowing 6+% if the actual shelter data is reflected in May's figure. Now, another major event is happening in China that could further drive inflation higher. Remember the Suez Canal crisis back in March 2021, which created a hell of a lot of havoc to global trade? Well, history seems to be repeating itself, but this time round, it is in China where another shipping crisis looms as a result of COVID-19 breakout that is resulting in massive port delays and driving up costs again. The waiting time at the Yantian International Container Terminal, a port that is 50% larger than the port of Los Angeles, which is the #1 port in the US, has skyrocketed from an average wait time of just half a day to 16 days. This is driving up shipping costs and resulting in massive shortages of Asian-made products. Unlike the Suez Canal blockage that saw European nations more significantly affected, this time round, many of the affected shipments are destined for the US. Now, this data has yet to translate into inflationary numbers in the US. China is the #1 trade partner of the US. Whether the US love the Chinese or not is another issue, but they sure continue to depend on China for many products. With the US depreciating against the CNY, it is now more expensive to import from China. Now, add the rise in shipping costs and all the shortages that is happening as a result of the Yantian port COVID breakout, and we have got ourselves a nice pot of hot soup waiting just to explode. Even Home Depot is now becoming a container ship owner to deliver its own goods. So for US consumers, be prepared for higher prices and longer waiting time if you're looking to buy products made in China. In fact, you should be shopping for your Christmas gifts right now for your kids and loved ones.
Given how I always love to be prepared, I've already done my Christmas shopping this year for my kids. As a result of the above, one might wish to check out shipping companies such as Danaos Corporation, ticker DAC, listed in the US, as well as shippers exposed to the Asia-US routes such as Costco Shipping, ticker 1919, listed in Hong Kong, all of which are benefiting from record freight prices. Again, not a recommendation here to buy or sell the stocks, but a reference points for further investigation. Big retailers such as Home Depot, which sells low-cost, bulky products, is currently finding themselves at the receiving end of the stick when freight costs, which is a significant component of their overall cost structure, skyrockets with no end in sight as to where the ceiling might be. Time will tell if they will pass on the price to retailers. I might be wrong, but I won't be too surprised when inflation numbers ahead break the 5% mark and continue to stay elevated in the coming months. PTJ is currently waiting for the Fed to give him the green light to go all in on inflation investments this Wednesday. What are you waiting for to protect your portfolio against the silent money killer? Do check out our other inflation videos to get an idea of what to buy to protect your portfolio. Once again, if you do enjoy this video, do remember to hit the like button and subscribe to the NAOF YouTube channel. This is Royston, signing out.